Hello traders, 'tis I, the Rumpled One, coming to you on Wednesday, April the 9th. The year's 2025. Let's talk trading. Assumptions. These videos are for educational purposes only. Your results may differ from mine. And to remind you, always have your risk management in place so you never lose more than you're willing to lose on a single trade or single trading session. Now, we all know about assumptions. We've been told not to assume because when you assume, you make an ass out of you and me, right? Well, the funny thing is, when you sit down at your trading platform and you place a trade, you start off with an assumption. You start off thinking, if I take this trade, chances are I'm going to win. And the thing is, if you didn't make that assumption, you wouldn't make the trade because, in other words, your method, your indicators, your system, your gut, the coin flip, whatever is telling you to take this trade in a certain direction, either long or short, right? So, for example, right now, you can see we just crossed above the 2,500 and we just got a red stripe. Now, this is telling me I should go short. Thing is, I might be right, I might be wrong. Now, the tricky thing about trading is it's not a trying to think an instantaneous result. Like if you flip a coin, you call it heads or tails, within a few seconds, you're going to know whether or not you were right. If you bet on a ball game, at the end of the game, you'll know because there will be an end to the game. The clock will run out. Or if you bet on a horse race, somebody's going to cross that finish line first, whether it's your horse or not. You know, that's part of that's why you're betting, just to see. So, point being is that in trading, it's a little bit different because in trading, we can wait it out literally forever so long as our account can withstand the drawdown. And that's what makes trading so different. So, for example, had you taken this trade short, you may have been up for a pip, maybe be down a pip. But the thing is, let's say it goes up and then later in the day it does that. So long as it doesn't go up further than your acceptable risk limit or what your account can stand, then the time while it was a loser, if you wait it out, now it becomes a winner. But the point is that we're making an assumption. And so since we know we're making an assumption, since we know there's a possibility we could be quote unquote wrong, we could be on the unprofitable side for a while or forever, what we can do is rather than use all our gunpowder here or all our money or all our, lot size, maybe we only go in with a half a position, a third a position, a quarter position. And then what happens is if price moves against you, it gives you a chance to add in and get a little bit better pricing. And that's something that not many really talk about. Because usually what happens, at least when I take a trade, it'll run against me. Like I said, I can be Mr. Inflection Point at times. But it'll usually go back to where I entered for the first time and then continue on. So that's why I said sometimes I need to write an EA where when I hit the button, it says, "Okay, we'll do that trade an hour from now." and see if you'd be happy. Because as you can see right here, I said there was a psychological 25 and had the red stripe there. And actually, we had a red stripe right here, but it's covered up at the moment. And it's just a tiny red stripe right there. And so as you can see here, that trade may have been worth a pip, and it's, going the other way. And so what could happen is you might wait for another signal if you had taken a short. Because normally what you'll do is you'll wait for this candle to close, or at least sometimes you might wait for it to close and then take the trade here. And as you can see, you got a couple of blue stripes telling you to buy and go long. And, if you take a quick look at the multimeters, pretty much everything, at the higher time frames, we're telling you, yeah, you most likely want to go long. In fact, you can see here close minus open on the H1, it's 25 pips. And that's from right here. It bounced off that double O or triple O, however you want to call it, and ran up 25 pips. So that's just something traders really need to think about, is the assumption that their trade's going to be a winner. Because if you were assuming it wasn't going to be a winner, you would either A, not take the trade, or B, take the trade in the opposite direction. So right here, if you're thinking shorts are going to win, then you might want to take it in the opposite direction. So you can see right here, we got another opportunity almost at the exact same level to go short. So once again, you'd be up a few pips. And you can see how it's bouncing off that 25 psychological level. You see it crossed below it. Let's see, where did this open? Yeah, so this one did actually look like it did close. It closed slightly above. This one, I believe, closed below. But you can see here how it just keeps pushing across that 25. Buyers don't want it to get below there, but we'll see if the sellers can push it once again. So this is sometimes the struggle you deal with as a trader. So this might be a perfect example here, live example where you got a signal short. And so if you wanted to be a red rat, you'd go short, you got a signal long. And in either case here, you could see both traders could actually make money. It's all about waiting it, patience, and taking those small profits when you can. So let's see, this opened, where did this open? Opened at 30, went all the way down to 23. So you maybe could have taken a 5 pip profit out of that. And then almost the same here. 4 pip profit, maybe 3, or if you waited. And so I know if Walmart was trading this, if he, chances are I've been going short, he'd be going long, and he would have doubled in right here to make his money. But you can see we're basically almost having a little tug of war right now. And prices pushing right back across that 25. But you can see we're making lower highs, pretty much lower lows. And there she goes. Notice this is the previous day's high. We broke out of the wick zone here. So who knows, we might try and get back into that wick zone only to be rejected again. And so since I mentioned wick zones, let's just go back here. You can see here the wick zones, a lot of action through that upper wick zone of yesterday. But as you can see, once again, you need to take these profits, when you can. You just don't just sit there and wait forever, because if you would have went long here, chances are you could have been stopped out. And if you would have went short here, chances are you might have gotten stopped out if you didn't take those profits. And we're right below that weekly open also. So that's something else to consider. Do they want to turn this green? So let's just take a quick look here. All the gaps have filled this week. You see we haven't hit that weekly pivot yet. Look at the opening range here for the day. Opening range for the month. You can see we got close to it, but not quite. It's like we rejected the yearly midpoint from the previous year. And for the year, we're 315 pips above the open. You can see we put in a yearly high, and it's definitely pulled back off of that. In fact, 380 pips. That'd be a nice profit if you had shorted the 3,200. We had an inside bar yesterday. You see we broke it. There was a nice move there. Lots of inside bars. Holy cow. Just the other day, there was hardly any, so I guess they made up for it. Once again, ranges are pretty crazy. 121, that doesn't seem right. Something happened? Oh, I guess it is right. Oh, that's close minus open. Range is 121 today. Okay, we took out the monthly. We haven't taken out the weekly. We took out the daily. Still have a missed daily up there. And fellow traders, I'm just about out of time. So when you sit down at your trading screen, remember you're making an assumption when you hit that enter button, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.